This is interesting. We are going to talk about climate, and it's nice to talk about climate in a fintech forum. Climate involves all of us because we all want to safeguard our Mother Earth. So even as we are building, we want to build sustainable products. And as we know, we are in the space where it's most vulnerable in Africa, where we are having many emissions. So this panel will be able to help all fintechs that are in the room to understand what role then fintech plays in this climate space. I would like to invite all of you. You can introduce yourself and what your firm specifically does to in this climate space. I'll start from far end.
Yeah, my name is Ernest Chitechi, and I work with Kenya Climate Innovation Center. Our role is to support small and medium enterprises who are developing climate-smart innovations, and we support them from idea to scaling. Thank you.
My name is Bianca Gishangi. I'm the regional lead for Africa at VCMI. So VCMI is an integrity standard for corporates on how to make credible claims with carbon credits, but we also work with host countries to incorporate high-integrity voluntary carbon market activities.
Good evening, everyone. My name is Daniel Kitwa with GreenMax Capital Group, Deputy Director, Energy Access. What we do at GreenMax, we are an energy and climate fund manager. So we manage a number of funds ranging from concessional instruments like results-based financing, debt targeting investments into energy access and energy efficiency, as well as productive use infrastructure, and providing debt and guarantees along those lines. We also have an advisory and a consulting arm supporting DFIs, donors, NGOs, energy accelerators, find value and opportunities across the continent, and we support projects across sub-Saharan Africa and parts of Latin America and Southeast Asia. Thank you.
Hi everyone, my name is Hitul Patel. I'm Chief Investment Officer with 54 Collective, and I guess that means I think we're one of the only VCs on this stage, so we'll bring a different perspective on looking at early stage business models and the nexus of climate and fintech.
Thank you all. So Patel, because you actually look at fintech solutions as a VC, I would like to ask you a question. What does climate smart fintech solution mean?
I get the toughest question first. This is not an easy one. So, I've been thinking about this for a while. Does not mean I have a full answer. I don't think the industry does. I think there's a few ways to approach it. One is, as we think about fintech as rails of doing business, that means it crosses all sectors. And so one thing we have to think about is, and I think my colleague mentioned it earlier in terms of embedded fintech, is that it's going to be a part of the solution for all different sectors, including when you look at climate models. So one example is, recently started looking at something that's essential with smart irrigation, which we have a way to advise hundreds of thousands or millions of farmers on how they should manage their water, which would have a major impact on climate, but also the communities. Now, part of that is going to probably require some sort of payments, embedded payments piece, right? Or finding a way that someone else pays for the farmer because they're the buyer, because the farmer may not be afforded the service. So all of that's going to have a fintech component. So I think that's one example, but there are different variety of examples that come up when you start looking at early stage models and where these solutions may come from, and then where the innovation is at that mix between fintech and climate.
Thank you, Patel, and also for sharing with us an illustration that then of the agricultural space that then makes it easy for us to understand. So I would go to Ernest, sitting at KCIC, and here you are talking to the Africa FinTech community. What climate solutions do you see are much needed in Africa? And what innovation opportunity does this present to fintechs in Africa?
Yeah, thank you for that. So maybe just to set the context, as we all know, climate change affects Africa more because most of the Africa people actually would derive value from the physical environment. And that physical environment is actually affected by climate change. So when we are talking about innovations and solutions, we need to ask ourselves, how do we look at those solutions that will enable the African continent, one, to understand the risk. So like things like early warning systems that can help them now get to know when is it likely to rain, when is likely to have a drought, and all those things then will help them build resilience. Then also look at the ones that then can make them to adapt. So in the sense that, yes, we know there's climate change, which is an issue, but then how do we adapt? So we are looking at solutions that help them in terms of maybe early maturing seeds, smart irrigation systems, maybe drought tolerance innovations that are there, looking at maybe smart energy solutions that then can help them adapt to the effects of climate change. Then finally, we are looking at solutions then that can help them now build resilience around the risk itself. So the solutions around, for example, digital insurance that they can take, so that then they're able to insure themselves around such issues. So those are just some of the ones that we are talking about. But maybe going further to what my other panelists say, Africa is mainly an agricultural continent. And being an agricultural continent, we need to ask ourselves then, how do we produce our food and also maintain the environment? So we need to look for very smart climate solutions around agriculture, then that will help us, and also look at issues around value addition. So those are the ones that I can currently mention that will actually be needed around Africa.
Thank you very much for that. And I like that we are shifting the conversation of climate from challenges to adaptation and developing resilience, because that's the only way then it makes sense. Bianca, over to you. Could you help us understand what it takes to ensure integrity in the carbon markets? And how does your role at VCMI contribute to the importance of integrity and trust in the carbon market ecosystem?
Sure. In fact, you just touched on it, the trust aspect, you know. For us to be able to engage in these activities with high integrity, there has to be transparency and meaningful climate action. So what that means is that there needs to be robustness and accuracy when we're measuring and monitoring, but at the same time, it's actually benefiting the communities, and there's a lot of transparency about that. It's equitable. So you can't just look at it from one siloed aspect. I think technology has really helped in terms of the monitoring, reporting, and verification. It's made it a lot more accurate. Think about like clean cooking. Now you can have real-time monitoring with cook stoves, so you're not estimating. You know, you're very sure about the credits that are coming out. So you need this to make it more robust, but it's not just about the emission reductions. How is that community benefiting? What jobs are being created? What resilience is being made out of it? The sustainable development benefits. It's an entire ecosystem, and this also needs to be captured in the pricing. So how do we actually get projects that are holistic, that cover all this? You need to be able to have standards that can set out the environmental and social safeguards, but at the same time also the monitoring. He's mentioned agriculture. Technically, these are one of the hardest, the sectors to monitor nature-based solutions. How are we improving on that? How are we developing our own methodologies, especially for Africa, that actually benefits us in this? You're seeing a lot of innovations coming up. You're seeing biochar. You're seeing removal space, so it's not just reductions. There's a lot going on. So how do we promote businesses to do this? And for that, we need to bring in the local financiers, because we've had a lot of financing coming from MDBs or large, investors from abroad, but how do we make it localized? So our role is to work with governments to ensure that policy can enable this. And with integrity, on the credit side, ICBCM has a lot of standards on the quality of units, and we do on the companies using these credits, but that alone will not scale. We need the governments now to come in and create an environment that allows us to innovate more.
Thank you for that. That's a whole masterclass on carbon credits, integrity. You wanted to say something, Patel?
Yeah, I think it's so many fantastic points that are missed by people, I think, who focus on just the asset class. And because if it's just an asset class, it's not going to help the global south. It's going to help the buyers and sellers. It just becomes another tradable asset class that, like stocks and other things. But if we think about how it can be a part of systems change, whether it's agriculture or energy, i.e. cook stoves, or other pieces, solar, then it becomes how we can shape the communities and protect the environment and capture some value from that. And that's a very different approach than it becoming an asset class, which is mainly what it's been pushed as. So I'm very wary, and I do love seeing local people think about it as, no, we're going to take control of how the message and the system should be developed.
Thank you for that. Daniel, you have something to add?
Yeah, I think great insight. I think from a carbon market perspective, it is quite true that a lot of programs are pushed by the buyers as possibly part of their own targets to reduce scope 2 or scope 3 kind of emissions. But also from our perspective, we have seen opportunities where these carbon financing could actually be an additional revenue stream for the project developers. So for example, it could be an IPP, it could be a mini grid, it could be a clean cooking company. And that sort of benefit is sort of passed down either if you're serving the bottom of the pyramid customers, either as a community benefit, as a subsidy, particularly for markets or regions where it's still yet not commercial. So I would say as long as that initiative or program does not derail you from the main thing, that becomes a good initiative, because again also we've seen a lot of companies spending a lot of resources because it can be quite expensive, and both in terms of time and finances, hiring consultants, doing community engagement, all that sort of 2-3 year cycle for you to have your project registered. So I think there's a fine balance, and also it might require you to get to a certain level of scale for you to be able to aggregate enough projects to unlock a minimum sized.
Thank you for all those insights. And this being a Fintech summit, the portion of Fin is financial, and now we want to talk about some money. And Daniel, at GreenMax, you lead a 54 million euro donor-funded program focused on off-grid businesses in Africa. So how is this tied to climate solutions, and how are businesses or Fintechs able to tap into this capital?
Yeah, thank you. I think maybe to just give context, in Africa, we have about 600 million people that are unelectrified, and about 150 million that are considered under grid. So the conversation around climate in Africa is mainly an energy access scenario. There are some regions outside, like in the global north, that the conversation is around energy transition. So they already have energy access, but them they're looking at transition, and hence the conversation on carbon credits. So for us, as a fund manager, we are entirely focused on that piece of energy access, because without energy access, really some of these solutions around mobile phones, financial inclusion might be quite challenged, because energy is sort of the enabler for all that. So in one of our programs, as you've rightly mentioned, we are supporting decentralized utilities, particularly mini grids and standalone solar solutions like the solar home systems, to electrify communities that are underserved. And where we've seen opportunities around fintech coming on board is we've seen a lot of penetration on the pay-as-you-go model. We've seen a lot of solar home system companies working with mobile network operators, either to provide the payment infrastructure or the, using the mobile phone as sort of the credit and underwriting infrastructure. So I think on that, there's clear use cases, and that has been proven. The other opportunity we have been seeing, particularly in our initiative, is because we have a pot of our money is concept, and we have. Better?
Yeah.
Yeah. So we have one of our verification processes is done entirely remotely. So, for example, we are supporting projects as far as Mali, Benin, DRC, Kenya, really across the continent. So we see a lot of value for companies that are in the room to partner with mini-grid operators and distributors, either to support on the hardware front around maybe smart metering or payments, and also traceability of those sort of connections. So we think there's a lot of support, particularly that is not inherent, these are skills that are not inherent in the kind of entrepreneurs we support. So we think there's need for partnerships that could emerge around that and also unlock our financing. Yeah.
Thank you. That is quite interesting and also very beneficial. So, Hetal, this question is yours. From a VC point of view, from your experience in the climate space, what innovative ecosystem approaches has worked when it comes to the climate approach? And what role can private startups play in this?
Sure. So I'll start with kind of the second piece first, in a sense, since we focus on that. We and a lot of other funds do work and try to find early stage or slightly later stage climate tech startups. And so that is an area that the private sector is already starting to move on, and in many ways probably a bit faster than the corporates and others who we're still trying to figure out where they can play, and it's just harder for them to move their bigger organizations. And then the role, if you're a VC, which we are, is really being able to use your risk capital and your catalytic capital to be able to take a chance and experiment and say which models can work. So I described smart sensorless irrigation. It's super early. I'm not sure it will work. I'm very optimistic. There's payments across the food systems. There's aggregation that includes payments and then tracking to be able to give back to the community based on your carbon credits or just savings. There's more transparency across food systems solutions. Any of these will have a fintech component, because I know that we're at a fintech conference. So it'll have a financial component because the business model will need that to be viable and sustainable long term. So when we're looking at it at 54 Collective, whether we're looking at it from our concept stage approach or pre-seed and seed, we're really looking at, can this business address a real problem? What will the product be in 3 and 5 years? And can it actually scale to have impact? And across any of those, yeah, it's true. Given what I think almost everyone said, agriculture is a big part of GDP in Africa. So agriculture is going to be a piece of the climate solution. I think we have to think about that, and what does that mean in terms of the type of business models, the type of sectors, or the things we look at. It can be everything from weather systems awareness to rainfall monitoring to a bunch of other types of business models that come in. But it's not just in food systems or agriculture at production level. It's across food systems. How do you make things more efficient, growing more efficient, logistics cleaner? It's a big piece, right? And so I think we look at all of those, and the private sector has a place to play in a lot of those areas and business models versus our friends here who are doing more research with think tank and working with the governments to educate them on saying what could be a good policy and regulatory framework that works for the communities where we work moving forward. So,
well, thanks for that. Clearly, it's work in progress. Yes. Now, as we wind up, I can open this up for Q&A. You don't have Q&A, so I can ask maybe 2 last questions. Bianca, where do you see this climate space in the next 5 years?
In the next 5 years. Okay, so let me speak like from a carbon markets perspective. I think there are a lot of projections out there. I think there is projections of 50 billion being mobilized just from carbon markets, the voluntary space, by 2030. But a lot needs to go into that to actually be realized. So you need to have the frameworks in place. You need to have the ecosystem that promotes this. So I think in 5 years, if the governments have created an environment where the private sector, because actually when we think of climate finance, a lot of it was publicly funded, and we know the issue is actually bringing in the private sector. And carbon finance is actually catalytic. So what he was talking about in terms of subsidizing, it's supposed to be used with other financial instruments to actually make technologies that are too expensive come onto the ground. So if we prioritize this type of technologies in these sectors that we're talking about, agriculture, clean cooking, mini-grids, energy, electrification, waste management, all of that, you create opportunities now to create projects that can come up from these sectors, and then bring in the resources that we have. We can't forget the youth, you know? How are we creating opportunities for them to start up businesses like this? But also, how do the financiers feel safe enough to invest? Because he talked about risk, and I think it's different across different financiers. Like for the banks, their risk is, can we actually get that credit at the end of that long project, you know? But how can they do it in a space that they feel safe to do that? So we need innovation. We can have regulatory sandboxes that can promote this, but ideally, let's have policy that is aligned with our climate priorities and then now enhances our resources.
Thank you for handling that crystal ball. And lastly, Ernest, what priority action items are you pursuing at KCIC?
In terms of priority actions, one is to see that all of us are aware of the existential threat about climate change. So making people aware. Then the second one is now developing solutions that then will address that threat. So we are looking at developing solutions around renewable energy. We are looking at developing solutions around agriculture, water management, also looking at matters waste management and circular economy, and then finally looking at matters around commercial forestry, and to just ensure that we are providing solutions that matter most to Africa, because those 5 sectors that I've managed are the most affected by when it comes to climate change, because you'll find as the population grow, we need to feed them. So as we feed them, we need to produce food. Production will need energy. After we've consumed, you'll end up with waste. How do we manage that particular waste through circular economy? And then now we need to provide our citizens with clean and safe water, whether it's for agriculture or for consumption. And then finally, we also need to maintain our ecosystem biodiversity. So those can only be achieved if we look at those 5 key sectors, because they're all interrelated. And with that, then we'll be able to achieve sustainable development.
Thank you very much for that. These are early day discussions of bringing in fintech and climate solutions into the room. So I'm sure as we progress, these discussions will mature, and we'll have more and more fintechs embedding into the space and having more innovative solutions in that space. So thank you for the panelists. I think we'll wrap it up there.